Welcome, everyone. We've got a great panel for you today, so we'll get straight into it. We have Jeremy Owenson, insurance expert at Luxoft down on the under, Tim Smyth, CEO at UK General, and next to me, Kate Wells, COO at Aviva Private Clients. To kick things off, Jeremy, could you give us a bit of an introduction to yourself and your background?
Sure. So I've been in the insurance business a long time, started off with Zurich Insurance and then walked over to the dark side to the outsourcing and technology side of the sector. I've joined Luxoft. Luxoft was acquired by DXC a couple of years ago. It was very big in the banking space, and a lot of the stuff that we were doing, particularly around analytics, lent itself over into the insurance sector. So I was brought in to build out those propositions, and really what I'm hopefully going to be discussing today is how analytics can have a big impact on your underwriting decisions and processes.
Fantastic, thanks. And Tim?
Hi, yeah, good to be here. And a bit like Jeremy, I've been in the industry way too long, but the first quarter of a century, shall we say, broadly in the broking space, but towards the end of that, much more then involved with MGAs. And then I thought it would be so much easier to be an underwriter than a broker. I was very wrong, and spent the last 10 years both owning MGAs, running them for other people, and in October of last year, we managed to do an MBO of the businesses that we're running, so we're now not just owning and running UK General, which is a personal lines MGA, but also a group of commercial businesses as well. So we're now focused on bringing those together, and certainly looking forward to the challenges that brings.
Fantastic, thanks, Tim. And Kate?
Hi, everyone. So similar, been in the insurance industry a long time, pretty much my whole career in the personal lines kind of segment. And I've worked too on both sides of the fence, broking and underwriting. I'm not sure which is the harder, actually. But I've been at Aviva a very short amount of time. So I was part of the recent acquisition that Aviva made of Azure, which was a InsurTech MGA. We were at that business for 6 years, built it sort of from ground up, and then Aviva have bought that business very recently as part of their desire to accelerate their size and scale in the high net worth market. So yeah, delighted to be here.
Fantastic. Thanks for those intros. Before we properly get started, just to let you know, we want to make this as interactive as possible. So if you do have any questions, feel free to submit them through the Brella app, and then I'll put them to our panelists today. But to kick things off, Jeremy, if I can come to you first, what would you say are the biggest underwriting challenges facing insurers at the moment?
To give you a sort of an example of the change in tech between when I started underwriting and today, I started off when insurance companies in the household side could produce a rate card, and brokers would sit there with 10 different rate cards and work out each individual rate. And that was probably the highest sophistication of underwriting. My chief underwriter said to me, get AXA and GRE and all these different insurance companies and take the average and we'll put it up by 10%, and that'll be our rate for this household business. Today, data is key. So the amount of data that's around, both in terms of historic data that insurance companies have, because the data is now held on data warehouses, but the data that's available in the open market and on the internet is incredible. So you need to understand that data. You need to be able to use that data correctly and get the right risk price, because at the end of the day, because we're in a very fluid market, if you get your price wrong, you're in real trouble. So it's about getting the data, understanding the data, and using the data to price effectively.
Fantastic, thanks. And Kate, what are your thoughts on that?
We could do a whole session on challenges for underwriters at the moment. I think there are a lot of them. You've got a lot of external factors. I think in our space, in high net worth, we have challenges with data in that there isn't as much data available that's specific to our segment. It's a niche line of business, so you've got to be careful with the data that we're using. I think, like all insurers, climate change, big issue for us in terms of just some of the emerging trends that we're seeing in losses, supply chain pressures, putting a lot of challenge into the claims process, rising inflation, and the challenge for customers to insure adequately. I think under insurance is a challenge in terms of helping customers to understand how to insure, especially in the high net worth market. where they can't just, tap it into like a BCIS calculator and come up with a rebuild. So I think there's, challenges that are common to all insurers, and then there's a sort of a layer of challenge that is specific to niche businesses like high net worth.
And Tim, what's your take on the challenges at the moment?
Yeah, just picking up really on one of Kate's comments there, particularly around inflation. We operate a delegated business, so that means we give capacity to third parties, and off they go with the rates that we've given them. And obviously, there's some degree of control over that. But when you ask people, give you a good example, the Sunday Times, you had this annual survey, and they ask all the economists, what do you think interest rate's going to be, growth? And in the beginning of 2022, and I looked back on it the other day, the worst outcome for inflation was 7%. And they were basically calling him a lunatic. And most people were saying inflation will top out at 3-4%. Interest rates might go from 0.25 to maybe 0.75%. And then 12 months later, how wrong that was. And for us, that's very difficult to work our way around. And you've only got to look at the results of the insurance companies. A lot of them are posting at the moment. They're catastrophic. They're just not supportable. And a lot of rates got to go through that. So for us, managing effectively not just inflation, but stagflation, where you've got very poor economic growth, the impact on household income, how they behave. We've seen a very different claims pattern through the escape of water. I don't know whether you had the same, Kate, but in December than we had in previous events because of the state of the economy. How do you factor that in 3, 6, 12 months before? Very, very difficult.
Yeah, I think you do see different trends in high net worth simply because our clients, are able to put the heating on. Quite simply, that they're not faced with the same challenges that some people have. So I think there's some elements like that where you do get, a cushioning from broader trends. But then in other areas, we saw things like surface water flooding, where you have clients with super basements. That presents a different set of challenges that don't affect the sort of wide. The wider personal lines market. So some are common, some are different.
Fantastic. And Jeremy, how do you think things like AI and machine learning can help overcome these challenges? Can they, or where do you see the solution?
Well, 2 points. Firstly, AI will start to search through your data and understand things and start throwing things up to you. But what it doesn't do is it doesn't, take the human out the loop. AI is there to supplement and support an underwriter, not to replace an underwriter. That's the key. It's to give the underwriter more information, more data. So your super basements, as an example, is a good example. It's better that the AI can work out through looking at internet data or looking at planning histories to say, I know this house has got a super basement built. Is the underwriter aware of that? That's where machine learning and so on can really help. The other element I think that's worth bearing in mind, and this probably lends itself a bit more to the high net worth and the more to corporate and specialty, is it's all right having all that data, but you also need to record how your underwriter's using it. So again, you need consistency. If there's a lot of underwriter discretion, you need consistency around how that's been recorded to make sure that you're covering your burning cost and to make sure that your underwriter performance is okay. One of the challenges with corporate and specialty and high net worth is it only takes a couple of bad decisions by a bad underwriter to ruin a book.
No, absolutely. And one of the other things I wanted to chat about today was the switch to digital and how that's impacted the underwriting process. Kate, what are your thoughts on that?
So, I think firstly, the switch to digital is not easy, especially in a segment like ours. And when we set up Azure, that was kind of the challenge that was laid down to us. We had taken from AIG a book of high net worth, very traditionally underwritten business. So, your point, expert underwriters, using some data for pricing but manually touching every single risk. And our vision was, could we build a new platform, and certainly not so much at the high and really ultra high net worth end of the market, but in the mid net worth market, could we build a product on modern technology using multiple data sources to drive a much better customer experience. And for us, because we're an intermediated business, the customer is the end customer and also the broker in that process. So that was the sort of challenge that we set ourselves, was to create a product, look at all the pain points that we'd seen along the way, and some of those we've touched on. Why were we asking customers a ridiculous number of questions. They still get asked that today. If you go on a price comparison website, you'll still be probably asked over 40 questions in order to get a price. I mean, it's got a bit quicker, but that is the journey that customers go on. So we wanted to look at that kind of customer journey. How could we shorten the data set, provide brokers with a much better user experience, have much more dynamic pricing, so build a modern rater, peril-based rater, have numerous rules firing in the background that would enable our underwriters to make far better decisions, but at the same time, have a slick and easy customer journey at the front end. So it was challenging, and it was challenging for a number of reasons. One, I think behaviourally, that's the biggest change with switch to digital, is that this is a very, very traditional industry, and we like to do things a certain way. And in high net worth, particularly, the role of the underwriter and that sort of traditional, bespoke, flexible, touch every case approach is kind of well guarded, and people like that. And brokers need to feel very protected in the transaction chain. So whenever you mention digital, people think, oh, you're going to disintermediate us or take us out of the chain. Somehow we're going to be talking to a chatbot tomorrow. We're not going to be able to interact with people. And we wanted to sort of dispel all those myths, create a product that was really fit for purpose for the segment we were operating in, used and leverage the data sources that were available to, take some of the sort of friction points out of the underwriting journey, and, create something that would be really easy for brokers to use. And we worked very closely with broker partners to do that. So we actually built the product in conjunction with them. So it was an interesting journey. It was a bumpy ride because we had to change hearts and minds as well as build the technology and find the right data, which wasn't always out there. So some of it involved, building our own models around data that already existed. But it was successful. I mean, the product sold really well, and it was part of the product suite that Aviva bought and are really interested in developing further.
Fantastic. And Tim, what's your experience been of that digitization of insurance?
And again, we're sitting here one step behind. So I think a lot of our distributors, affinity partners, are well used to using digital for the journey. We're all very familiar with aggregators and, very sophisticated onboarding of clients and selling of product. We sit one step behind. And as I say, on a delegated model, I think the biggest challenge that we face traditionally is that people would be writing business for 30, 60 days. And the first point of knowledge that we would have is when they send an Excel spreadsheet in and says, by the way, you've written whatever, whether that's good or bad, at which point the likelihood is you've probably got a number of claimants who have phoned in and said, I've got a claim. And we use TPAs to manage our claims, and the TPAs, we've got no record of you. And already there's friction in the first moment when a claimant wants to do something because there's no knowledge of that policy existing. So that really had to change. But there is a huge reluctance, I think, of the industry sometimes to move into very proven technologies and deliver a much better solution. We now tend to work only with people who can give us access to daily data, both on the claims and on the pricing, so that at any point in time, it doesn't need to be real time, but certainly within the day, that we know all the claims that have come in against our policy count, even though we haven't sold those policies, but also the policies that have been sold as well. And I think that's given us a much better view, and we can be far more dynamic in our underwriting practices as well, because we can start to see patterns emerging 60, 90 days before they would have happened before. So that's probably been the biggest impact for us. And I think as we move forward now, using technologies to do more around risk mitigation and planning how our portfolio looks is, things that we're actively looking at the moment.
And given what we heard earlier about how kind of rapidly changing the market is at the moment and how things are so much different to they were, a year ago, is that even more important in today's world to have, to be able to spot those trends earlier and react to them?
Yeah, absolutely. I'm going back to the inflation point. I remember having conversations in the early part of 2022, and then how rapidly that developed. And if you remember, the headlines at some point were that inflation was going to peak at, I think Goldman Sachs said 16.8%. Which is almost completely out of control. And, what you're seeing then is supply chain issues and trying to price any product in that environment now. And I think we've got some really challenging underwriting market conditions, which is a good opportunity, I think, for people. But it's going to be a shock to a lot of customers who are going to be paying a lot more for their insurance, whether it be motor or household. But the capacity can't be there losing money year after year. Interesting that some of it really got started by the regulator doing away with dual pricing, and that was the first thing that dropped the market pricing and created a bigger problem than might have existed previously. But that's another story.
For another day, that maybe. And Jeremy, what's your take on what Tim and Kate have said there? And do you have any kind of experiences from the work you've done with insurers? That
Yes. So a couple of points. Firstly, sorry to hark on about data, but a good example is in a flood event. You know, if an insurance company has knowledge that a flood event is impacting a particular part of the country, it can go out and pre-buy all the drying equipment. So when somebody who doesn't have access to data suddenly finds that they can't dry the properties out quickly. But from a technology perspective, again, I think the insurance sector is used to having very expensive policy systems or claim systems, and the change time for doing things on policy systems and claim systems has been ridiculous. Even in pricing on the broker market, you know, the software houses, you know, almost have the market cornered and are quoting long lead times for making changes to products and prices. Now, modern technology, modern low-code solutions are so quick and easy to stand up and configure that insurers need to have the mindset that they're going to start creating things on a quick basis. So the customer interface, the broker interfaces, stand things up, make them tailored for particular products or particular markets, because it should automatically seamlessly connect back in. Why replace a core system of record when actually what you're trying to do is this little bit of customer enhancement or broker enhancement up front? So again, my message to the sector is, outside of the insurance space, everyone else is using modern low-code solutions to execute change very quickly. We should look at that rather than looking at changing core systems.
Absolutely, thank you. We've had a question come in now through the app, and it says, how do you balance the data requirements for building a good digital product with simplifying the customer journey? From a digital perspective, the more data you have access to, the better insights you can have for product pricing or development. Kate, if I can come to you first on that, what's your take?
Well, I mean, it isn't easy. I think there's sort of a sense that, you know, there's a huge amount of data out there, so you can just sort of replace underwriting questions. The challenges we went on, I mean, some of the data points we looked at being able to sort of solve for our brokers was rebuild. We wanted to be able to, the product that we built, it has a blanket sum insured up to £1 million. So we wanted to be able to calculate a rebuild in the background. And we couldn't really find one accurate source of that data that was suitable for pricing a mid-net worth type risk. There was a lot in the standard personal lines sector, but when we really delved into that data, we didn't have quite what we needed. So we set about building that out. I think you have to look at the outcomes of what you're trying to achieve. There's no point just you know, grabbing every bit of data that's out there and thinking that that's somehow going to simplify the customer journey or improve pricing. You've really got to see that whole journey through of thinking, what is the outcome we're trying to achieve with this data? Is it pricing? Is it a better user experience? Is it risk management? What are we trying to do with that? I think sometimes we get caught up as an industry in sort of buzzwords and things we think we should be doing. And sometimes we just need to stop and go back to basics and ask ourselves, what outcome are we actually trying to achieve here? Rather than measuring, you know, the number of data points we have or, you know, the type of data that we're using. I think it's important to get that balance right.
Tim, anything to add?
Yeah, I mean, I guess having been in the industry for some time, I remember having a conversation with the CEO of a very large insurance company, and to Kate's point earlier about how many questions to buy a policy. I can't even remember what it was, maybe a commercial policy. Hundreds of questions over many, many pages, and that's sort of attritional. And I said to him, at what point do you have roughly rate certainty, you know, that you think you probably know what the cost of this risk is? And he said, bottom of page 1. And yet there was 12 pages of these questions that the broker or the client had to fill in to try and get every bit of information out there. How much of it was used at the time? I suspect very little. And I think we're in a danger of that now, is that, you know, we're taking data enrichment. You know, most of our clients are working with that. We're getting all that data in, and that's driving some decisions. but it's by no way universal. You know, the core principles, again, as Kate says, you know, we need to make an underwriting profit. There are certain key factors that are much, much more important than maybe some nefarious little detail at the end that we feel that we should know. But the customer journey thing should become much, much easier. We should be asking less and less because the information is typically available to us. They should be affirming what we think we know rather than going through. So the experience should be much better. But it's, work in progress, definitely.
Jeremy, anything to add there?
So, I mean, there are external fintech companies who are looking at, you know, turning proprietary data into rating points. So Cytora is a good example, digital fine print, etc. So you can do that. I agree with the idea of using internet data to answer the questions that you should know the answer to. So if somebody gives you the address, you should know how many bedrooms they've got and where the house is and so on and so forth. I think the other piece that underwriters should look at is looking at different data sources that have a particular impact. So one example is online retailers have very intimate knowledge of the moral hazard of the people that they are providing clothes to. So if somebody is trying on lots of clothes, wearing them out on a party and taking them back the next day, you probably want to rate up their insurance premium. So why are we looking at new different data sources to get some genuine insights and some genuine improvements in understanding the underwriting risk that we've got, rather than saying, is it a blue car, is it a green car, is it a yellow car?
Can I just add something there, though? I think we were talking about this beforehand. I think with the more data that we've got, you know, we're running the risk of, as has happened in utilities, certainly has happened in banking, is you end up almost with the uninsurable class. And I think, you know, with consumer duty and our obligation to make sure that, you know, customers are treated fairly, you know so much about a certain segment of people that you end up not offering a product, and that's not right either. So it all needs to be taken in some form of balance. Otherwise, as an industry, we are doing a proportion of our potential buying clients, you know, a big disservice.
You know, absolutely. And one of the things I'm going to be speaking about this afternoon is the expectation gap with insurance. And we kind of heard there about speeding up the process, fewer questions. How do you deal with, in that much shorter customer journey, being able to explain what is and isn't covered in the policy, what extra charges there might be? Kate, is that something you can talk to?
Yeah, so I think, you know, if you look at the way we communicate with customers, it hasn't really changed over the whole of the time I've been in the insurance industry. We still send people, you know, 60-page policy wordings to digest. And it's not something we've cracked yet, because I think for a number of reasons, for regulatory reasons, for legal reasons, you know, you end up having to put an awful lot into the wording, and some people have done it better than others. We looked at, when we were at Azure, a more intelligent way of breaking the wording down, so we made it more searchable, bearing in mind we're not direct to customer, so this was through the lens of brokers who you'd expect to have a certain degree of knowledge already, so you probably need, you know, that approach would be different if you were dealing direct with the customer. But we were trying to make the wording more searchable, reduce some of the telephone traffic that we got with frequently asked questions, because, you know, it's great having data, it's what you do with it. So some of the analytics around just looking at the touch points, our brokers were coming back to us if they were asking the same question, could we make that better? But it's a challenge that we haven't really cracked. I mean, the beauty of high net worth is that it's very, very broad cover, and so the customer is paying a top premium for, you know, an all risks worldwide wording, and there's often very little that isn't covered. But when there is something that isn't covered, it still can come as a disappointment to people. So I think that comes back to, you know, how do we prevent losses from happening in the first place? Can we use our data more effectively to guide our customers around risk management, make them more aware of trends that are happening, you know, make insurance a much more proactive service than a reactive service? I think there's lots of work the industry can do around that, and you know, how do we continue to simplify and make things easier for our customers? It's an eternal challenge, I think, in an environment that where, you know, the regulator and the sort of legal teams we'll put up one set of challenges and then you've got customers with a separate set of requirements, and how do you marry those two up is still to be cracked. I don't think anyone's done it perfectly yet.
Tim?
Yeah, I mean, being controversial, I don't think is as big a problem. When one of the jobs that I have to do in my position is obviously monitor and manage our complaints. We do 60 products through 100 different distributors, so we get a sort of very mixed bag. We see far more statements of dissatisfaction around the claims process and about people being dealt with expeditiously and fairly than we ever do about products being sold. And if you look on the ABI website, if you really short of things to do, but they'll talk about the amount of claims that are actually paid that, versus how many are claimed for. And in motor, it's something like 98%. It's really, really high. There's very few claims that are actually denied. Households, not as good. I think it's about 88. You probably know, Matt, but it's certainly high 80s. So there's 10% of people going through, and probably not at your end of the market, but certainly 10% of the people making a claim and probably not understanding the basic, where they've got all risks cover or there's any accidental damage or there's just got a basic contents policy. So there's a bit of explanation, and certainly we can do a lot more. But I do think the service proposition is more need of sharpening. I'm not saying that this doesn't need to be done, but I certainly think there's more need even to offer a better service to our consumers.
Thanks. And Jeremy, Kate said there about the industry maybe needing to be a bit more proactive in helping the kind of customers manage their risks. Is that something that kind of you see as important to the underwriting process and helping to improve performance?
Yeah, I mean, obviously, a good managed risk is a better risk, and it's more profitable. But what it does is it builds that customer intimacy. I mean, particularly on more volume end of the business, if insurance is just a pure commodity, anything that you can do to help improve the risk is going to improve the intimacy of that customer, improve the ability to retain them, and hopefully long-term profitability. I think one of the challenges is technology. So some of the larger, more traditional insurers have got systems and technology that's aligned to traditional products. So what we're starting to see is innovation for new people entering the market who aren't bound by those traditional products. And when we talk about underwriter result, it's the more traditional insurers, it's the volume market that's really suffering. The new entrants are choosing the products that they want to sell, choosing the price they want to sell at, and getting some customer intimacy. So I think the challenge for more traditional insurers is, can you almost become a fintech within a large insurer, distance yourself from your legacy and try and do different, better things with your end customers.
Absolutely, thanks. And moving things on a bit, I wanted to talk a bit about data management. And Tim, if I can come to you, to what extent do you think that can become a bottleneck in the underwriting process, and how do you overcome that?
Yeah, I mean, it's been a huge issue, I think, traditionally. And I certainly go back to my earlier point about, we depended on people sending us Excel spreadsheets 90 days after the risk was run, and trying to getting anyone to have a sort of consistent approach to delivering that data so that we could aggregate these hundreds of schemes and be able to effectively consolidate into one monthly pack was a huge job, taking lots of people and lots of cleaning the data. And I think where that drove us is saying, well, look, just share the data with us. We're not competing with you. We need to help you do this, and we will identify the risk, the data within that data set, and take away all the need for cleaning copious amounts of data to try and get it into a format that we could then pass on to our capacity providers. So that's really driven that. But there is still, as I said, a huge reluctance for people to depart from the old ways. You're as strong as the weakest link in all of this, and all it takes is for a number of our distributors to say, well, we've always done it this way. We write all our policies down in a notebook, and then we type it into an Excel spreadsheet, and there'll be no mistakes, and we'll send it out to you. So we've come on a big journey, but I think that will accelerate a lot over the next couple of years as people feel that, well, they need to do that to make this thing work properly and take friction out. We as an industry, compared to lots of our peer groups such as banking and travel and so on, take a lot out of the equation. The customer typically gets back around 60p in the pound for what they're spending with us as an industry. Does that really represent good value? We've got regulatory costs, we've got running the business. So there's a lot of friction in our business, and anything that we can do to reduce that ultimately will give better value to the customer.
And Kate, what's your view on that from the high net worth world?
Yeah, I mean, I think the similar challenges. We actually had it round the other way. We were an MGA when we were at Azure, and we were sort of talking about how are we going to get data to our carriers, and we were suggesting more sort of modern ways of transmitting that data, and we were met with responses of exactly what you at the other end of no, it's fine, just sort of. We'll put it on this, we'll send you a bordereau spreadsheet template and you can fill it in that way. So you sort of get it, that even when there's a desire to change, it has to be on both sides of the fence. We see it, I think the challenge we've got now is that everybody's sort of woken up a bit, I think, to the value that they have with data. We see it with the broker market. We launched a tool to help with underinsurance checking, and we sort of said, well, look, if you've got historic books of business that perhaps have been on binders that are old, and these clients haven't necessarily ever had a risk survey, we've got a data model that we could run that data through and help you identify underinsurance. And we had insurers brokers really interested in that because they were worried about E&O exposure for them in that, they could have clients on their books that are woefully underinsured, and that could present a problem at claim stage. The challenge we've had with that data is getting it into them being able to put it into a format that we can use. So I think lots of people are grappling with we have a lot of data, not always in the right format. I think it's really important that we have centrally managed data. So if we're making changes to one of the data sources, we're not having to go back in and update every single report that we have, every rating factor. You need to be able to control that centrally. So I think, some of the bottlenecks that occur in the process just are kind of legacy hangovers. And we're working through, I think, as an industry, how to overcome those.
Thanks. And Jeremy, how do you work with kind of insurers to overcome this problem, and what are some of the solutions you've seen?
So the key thing is back to your point about understanding what is the business outcome that you're trying to achieve. What the worst case scenario is, you get a tech guy who says, I want a data warehouse and I want a great data tool, and I've seen this great one and it's fantastic, and nobody's engaged with the business. So the idea of exchanging data between organizations, the technology is available. Everything that you can buy every modern application you can buy now can do pretty much all of this stuff out of the box. So it's a question of just getting it and running with it, and then starting to use the data for business decisions. My biggest frustration with insurers is people who've got a data warehouse and got a data analytics tool, and then start buying other bits of fintech to do things on top of the process, be it a rating gizmo engine or a claims automation or a fraud tool or whatever. If your tech team have done it right, they've probably got the tools in place to enable the underwriters and the claims guys to run all the decisions they need from the data that they've already invested in. Most of the tools that people are using now have got machine learning built in, so don't keep buying new stuff. Just go and ask your underwriters and your marketing guys and your claims guys, what are you really trying to achieve here? And then use your data scientists and the technology team to deliver the answer, not to do more change.
Fantastic. We're going to take a look at some audience questions now. If you do have any more, please do keep them coming in. And Jeremy, one for you first. How do you deal with unconscious bias when it comes to using AI and machine learning?
That's a good one. That's a really good one. This comes back to the human in the loop. So unconscious bias, could be as obvious as a factor for gender that is being picked up that is actually illegal, or it could be anything. I've known some organisations who've put in bias based on nationality. Because they've just not understood the data that they're putting in. So back to my original point, machine learning is only as good as the person who's running it, and you've got to have that human in the loop that can make that check. Otherwise, you end up with some of the crazy unconscious bias decisions that have been in the press over the last couple of years.
And another question for you on AI, Jeremy, and I know you've touched a bit about kind of keeping humans in the loop. And this question is saying, are there any areas where you see that AI could replace particular roles within an underwriting process?
So But I've been in outsourcing and then robotics for years, and as all technology develops, everybody's role becomes more vulnerable. The key from a human perspective is to keep yourself relevant as the technology moves forward. So yes, if you're sitting doing, and I've seen this, when I was a young lad in the rating department, the underwriter in a branch of an insurance company actually took decisions on motor risks and on standard household risks. And that never happens nowadays because the rules are all set by a senior underwriter, probably only one in an insurance company, and driven by rates. So from a career perspective, we need to understand where the humans are adding value and drive our career paths that way. Recognizing that as technology gets better, it will start to do the more mundane roles better than the human can.
And do you think that could, I suppose, help the industry attract different talents into the sector as well?
I think the industry is attracting different talent. So, data scientists didn't exist when I was working in an underwriting department, and now data scientists are, hundreds of them in insurance companies. But what I've seen is people from other sectors coming into the insurance space. I talked earlier about online retail. So marketing people in online retail or people who understand customer transactions on online retail are now moving into the insurance space. So there's still a core of insurance experts who understand underwriting, who understand investments, who understand claims, but we're starting to pull in innovation from other sectors, which we weren't doing 20 years ago.
I was going to say, I think that's a really good point, because I think the role of the underwriter is changing. And I think, firstly, there's a question of what when people talk about underwriting processes, a lot of things some traditional underwriters do aren't actually underwriting. So if you can automate some of that away, then some of the data input that people are doing, then that makes sense. But when we launched at Azure, a lot of the technology team didn't come from the insurance industry. And actually, that was game-changing for us in terms of the behavioural bit and the mindset piece, that we had people challenging our way of thinking, because it's very traditional and we've always done it this way. And we had people who'd worked at, Ocado or different industry sectors altogether, suddenly asking us and looking at the lens of the customer in a way that we thought we were customer focused, until we actually really stopped and looked at how some of the other industries focused on customer. And that just made us go so much faster, because it was uncomfortable at the time because we were having our thinking challenged. And I think also where we're also going to see lines blurred is the role of product teams, because traditionally underwriting was king in an insurance company. And I think as we move into more a sort of modern way of working, you'll see the rise of product managers and head of product becoming much more influential roles, even in really large insurers, not just in InsurTech businesses.
Anything to add to that, Tim?
Yeah, I mean, it's a journey that we are still on. We, about 3 years ago, started to digitize all our data and put it all into one space, and hiring some really smart people, data scientists and people who give us analytics about the portfolio that we've got. And now, I think I read probably a couple of years ago, maybe controversially, that I think one of the jobs that's most at risk through AI and machine learning was underwriting. And I think, just picking up on Kate's point, I think there is a change in what, in our world, that underwriter needs to be doing. So the less of the procedural stuff, but more of building the relationship and understanding the needs and wants, which I think is much more difficult to replace through machine learning. But we're now at that stage where we've got lots and lots of data in the business, tens of millions of policy records, and lots of understanding about how business runs. But I think we are still trying to get our arms around how do all of the constituent parts of our business, whether it be in claims, in product, complaints, compliance, that they all are using that same data set. So we all have one version of the truth. And that's been actually culturally, I think, far more of a challenge, because lots of people who have been in the industry like me, I think, find it much harder to let go and say, this is actually the version of the truth that we should all be working from now. So I think that's been challenging for a lot of people, but we will get there.
Fantastic. And we've had one more question come in, and that's around, do MGAs face different underwriting challenges to insurers? Kate, any thoughts on that?
Well, yes, I think they do. I think the biggest difference with MGAs is you have another customer in the room, and that customer is your capacity provider or capacity providers, and your ability to keep your capacity happy and to deliver profitable returns for them is absolutely key. So I think, the challenge that, for all the reasons we've outlined in terms of the current climate that we're operating in and the pressures on profitability, do have an added layer of challenge in for MGAs, but I do think there can also be fantastic places to run niche businesses and to explore what's possible within a niche underwriting sector away from perhaps larger, incumbent insurers.
Clearly, there's a lot of overlap. I mean, I think particularly now where MGAs quite often are bearing some form of financial risk and reward relative to the underwriting results, I think it's a very healthy place to be. And I think you need to be of a certain size to be able to carry that type of risk on your own balance sheet. And we've learned, I've got a fat back and I've got a lot of scars on it, I can tell you, from having to basically deal with poor underwriting performance in products that weren't properly understood and then having to effectively make good in part with the insurer. That's a lesson that you learn the hard way. But insurers, it's a tough job. I remember one of my friends who ran a business that had a Lloyd's syndicate, a UK business, and also had his own distribution. And he was saying, my life is hell. 90% of my day is talking to one of the three regulators, effectively. We've regulated by one, thankfully, and that's a tough challenge. But having three masters in terms of that is very different. But also managing, the whole capital markets, running a balance sheet of that size is a very different skill set. But on the rest of it, product, data, underwriting, there's huge overlap now.
Fantastic. Well, we're coming into the last few minutes now, but before we close things out, I just wanted to, looking a bit to the future, next 12 to 18 months, what do each of you think will be the big game changers when it comes to optimising underwriting? Kate, if I can come to you first.
12 to 18 months in insurance isn't actually a very long time. So, I'm not sure we're going to see anything significantly dramatic happening. There's all sorts of buzzwords around the insurance industry and lots of, questions around, will AI replace humans? And I think the biggest things we're going to see is an advancement in analytics. So how do we take the data that we have and the results that we're seeing from that and really look through the lens of our customer and the kind of outcomes? And how do we make their journey better? Because I still feel, I personally experienced last week most frustrating phone call of my life, trying 20 minutes on hold, trying to get through to one of the mainstream insurers just to report a motor insurance claim, and then ended up resorting to a chatbot. So you think, for all the data in the world, for all the technology in the world, we haven't got the basics right. This wasn't Aviva, by the way. It was one of our competitors. But, we're still not getting that bit right. So I think we need to see an advancement in analytics to understand where the pain points are in the journey. I think that we will start to see advancements in some of the, especially in the high net worth niche. How do we use the data better to drive better risk management for our customers? So how can we be predicting some of the things that we are seeing happening in our claims journeys and helping our customers from avoiding that happening? But 12 months is not actually a very long time in the world of insurance.
Tim?
Well, the first thing I did, so it's a difficult question, but you did give me some warning that might get asked. I looked on ChatGPT and asked the question: what are this natural language program think are going to be? And it comes up with 7 different areas where they see, and obviously AI, machine learning, but everything from climate change to the Internet of Things. Things are moving so quickly, and it's hugely interesting. It's it's great to meet a bunch of very clever people here about how they can move our industry on. But Kate's right, by the time you get your arms around this and trying to look, 12 to 18 months flashes in an absolute blink of an eye. But it's hugely exciting, and I think lots of progress will be made. But it's not going to be necessarily a fully smooth journey.
Jeremy?
So I think the insurance sector has actually gone through a massive change, and it was driven by COVID. And it came from 2 perspectives. It came from how you deliver your service, how do you get all your people working remotely? But secondly, how the world changed post-COVID. We've moved to a lot more home working, less car travel, et cetera, and something like that could happen in the next 2 years. Again, it could be something that comes left field and attacks us. It could be that we spend the next 2 years trying to work out what actually happened and how that is going to stay changed going forward? You know, the way that we work now, is that the new way forward? It's an interesting, but I agree. Without COVID, 2 years, nothing would have changed in insurance.
Fantastic. Well, that's the end of our time there. So I just want to thank our panelists, and I think it's lunch now. So thanks, everyone.